Bow. Alright, let's do this. Let's do our top-down analysis. We're going to check the daily. What I'm doing on the daily is mainly giving a bit of a scope. Seeing what's been filled. Big gap. Filled a lot of the imbalances. Came down to some key levels. Boom. We'll clear some of this off. Kind of pushed straight through that, didn't we? So we'll get rid of all of this. And we mark up yesterday's previous day high, previous day low, basically all we're doing on the daily, but just getting a bit of a gist of what happened. So we got this gap that's since been filled, and we've just basically been on a bullish push since. There is a couple of 4-hour gaps from yesterday. We really just had a bullish push, so we could almost draw a fib from here to here. Make sure we mark out the retracement level, 50% retracement. What that's doing is basically setting it up so that we've got discount zone. I don't know, some say discount premium and it stays that way. I just say the cheaper area below the 50%. But if we come below here, that's where we want to be buying up. So on this particular chart on the 4-hour, if we're pushing bullish, creating higher highs, well, we failed to make it high. If we've got a couple of fair value gaps that are creating imbalances, we want to see if we can come back down into this area below here to buy back up. So when price pushes back down, if it does, we want to see it come into this area before looking to buy up. And that gives us plenty of room to come down as well. So we've got a couple of fair value gaps, but I'm not going to mark out both fair value gaps because we're just going to have a really colourful chart then. But we'll come and have a look here. This is looking a bit better. We did get a bit of a pullback, substantial. So this could tighten things up a little bit. We could draw them from here to here. Gives us a little bit of a better retracement, which I actually prefer, even though it's a higher time frame. Big wick down. So we had this inversion fair value gap as well, which played beautiful. Big push down, big push up, inverted, come back down, retest, and off we went. Really couldn't ask for any more beautiful movement than that, but we weren't trading yesterday, so we didn't get any of that. Now this 50% we do have a fair value gap, so this one's actually important to me. Right, this is actually an important 4-hour fair value gap. Now yes, there is some here and there's some here. And this kind of did break a little bit of structure, so this may be hard to break. We may stay in here and continue to push. But if we do get below here, we're kind of looking for the next area of supply and demand. Now there was a bit here, right? The bottom of this kind of is where the 50% is. But as you can see, nothing's really lining up. So we could come to the top here, which is the higher time frame, 50%. So this may be a key area, like this push here. But really the runs come straight up like this. Order blocks here. We could even come into the lower area of the order block, but to me, as a scalper, I don't really care 600 points down here. What I care about is if we convert, have we got enough room? And yes, we do. If we reverse, sorry, convert. So we're clearly in an uptrend on the 1 hour. You can see we're kind of making these higher highs. We did get a higher low. I mean a lower low, which means we could be reversing up here, especially because we came and retested this high level. So we had this key level here. And we've actually come up and tagged it. So that could have been the liquidity grab. So we could have actually come up, grab that, and now we could actually be starting to shift. So what I want to look for is key areas on the downside. Now we're inside this big fair value gap, but I'm going to actually remove that because a lot of this liquidity has been swept. These are my little liquidity lines. So to clear things up, I'm going to remove them. I'm going to move this. That's yesterday's high. And then on the 15-minute, we're going to have the Asia highs and lows here. So we just got to keep an eye on what's important at this kind of key level. This last little pullback before the push up, that's an important area, right? This order block. But if we're going to sell, that's kind of the targets that I'll be looking at. It's 200 points. Plenty of room, right? So we do have a zone here of supply and demand. If we come down, that's where I'd be looking. But that's not going to happen until we break this low. So what's important is we mark up Asia and London highs and lows. And we mark them out. So we got London low, London high, which has already swept Asia's highs and lows. And London low. So now we're kind of in the middle of the range. So that tells me is because we swept high, came back down. If we are reversing, we want to find key areas up here, which we've almost already found. So the 15-minute, you can see there's a fair value gap right up here, right? That's been tapped into to create liquidity, and that's just been swept. So that's showing me pretty good signs that we may want to reverse from here. But I'm not going to sell off that. I want to wait for market to actually show me. We also have a small bullish fair value gap here, telling me that once we swept Asia low, we bounce back pretty strong. So it could be a little bit of a consolidated day. We've got bearish momentum up here, bearish gaps up here, bullish gaps here. Asia's already been swept, so it's not really that important to us now. We swept the high, we came down, took out the low, swept the low. So if we're going to chop like this, we may see a ranging day where we take out the high of London and come back down, take out the low. Don't know. Alright. Alright, what I'm going to do is I'm going to open up the zoom to let the inner circle in. I'm going to go to the toilet quickly, and then we'll come back and do the NAS markup. I'm just going to go to the toilet quickly, Lorraine, and then I'll be back. Alright, I'm back. Should turn my music off. Sorry? A little bit. A little bit. A lot of that's just my old content being edited and cut, basically stuff that I've already had. Podcast episodes, like courses, all the stuff that, you know, I've had built over the years. Just kind of chopping it up. I'm actually going to do some more fresh recording over the next few weeks, I think. Start posting more and more stuff. Trying to post more about, you know, the psychology of trading rather than, you know, I probably will post some trades and some like logs and stuff like that, but it's more like, you can basically trade with any strategy, right? Like, let's be honest, there's so many strategies that you can trade with. I mean, not all of them work. Some of them are much better than others, but the truth is if you're disciplined, you can trade with pretty much any strategy. And it's more about like the constant stuff that we talk about and that growth and development over time of learning yourself, learning, okay, this is what I do. How can I implement something that pattern interrupts that, and then actually doing that, and then tracking that and journaling that, and kind of like the growth and the journey along the way sort of thing. Yeah, that's kind of what I'm more leaning to, because I think, like, you know, we've seen Instagram reels that are just full of just like, wait till this does this, and then you're going to be a millionaire 1 to 10 every time. It's just like, it's bullshit. It's not true. You know what I mean? Yeah, and so I'm trying to put a little bit of not a stop to it or anything like that. Just put a barrier in it of something that's a bit more realistic, if that makes sense. So that people who are really trying to learn and like become better traders have a realistic point of view. Do you know what I mean? Yeah. But yeah, I kind of want, like, I mean, it's probably easier to sell to the people who are just like, oh, trading sounds cool. Show me how to make millions by tomorrow. But that's not really the people I want to teach and trade with. Like, I want to trade with people who are like, I've been doing this for a while. I know my shit, but I'm struggling. I'm like, all right, let's work together and break through. Let's learn something new. Let's fix it. Let's do whatever we need to do. If that makes sense. All right, I got to quickly do the NAS because I haven't done the NAS yet. Which is just, markets have shifted, man. There's a huge gap. Yes, that's crazy. I don't think I've ever seen a gap like that. Yeah, it's like over the weekend, I mean. It's like a 300 and something point gap. Like, that's massive. I haven't seen anything like that in a long time. And lots and lots of movement. So previous day low was right up here. Previous day high was up here. I don't want to bother about the gaps below for now. Doesn't really matter too much to me. Previous day low matters just as much. Check out the 4 hour, same sort of thing, just absolutely pumping. Man, yesterday just took off, eh? I almost thought about jumping on the charts yesterday because I had some time, but I didn't in the end. Okay, so that's already balanced. Man, there is not much. %50 retracement. Couple of fair value gaps on the 4 hour. The 1 hour is trending up pretty strong on the NAS. Did anything major happen over the weekend, like fundamental wise? But did they? That's what I... Yeah, maybe it's just prog. Trump is threatening to shut it down. How's he going to shut it down? What the fuck's he going to do? Just stand there in the middle and be like, hey, you, stop that. You're not allowed. I said so. Yeah, fuck it. What the fuck's he going to do? It's alright. That's why Mondays can be tricky. Yeah, Asia really didn't do much, did it? Yeah, London went for a little bit of a run, but we didn't take out Asia lows, so what I'm expecting after this big pump, it's pretty reasonable to expect a pullback. Doesn't mean there will be one, but it's reasonable to expect one. And so what I'm saying is if we take out London highs and pull back, that'll be a nice opportunity to sell back down to maybe Asia low. We may not come much further than that, but just on the NAS that I've got up here, we sweep London high, we come back down, we attack Asia lows, we find this fair value gap, and we could continue to push back up pretty aggressively from there. It doesn't necessarily need to pull back too far. Now, it could, on the other hand, pull back and just collapse the market because we've been pushing up so much, but it's not also something that I'm like counting on, if that makes sense.
Exactly, yeah. I think previously it's something I would have been fairly confident in, but not now. it really can.
Yeah, so let's have a look at the NAS while we're here. Can you just also keep an eye out? Thank you. Always. Yeah, it's true. It's good practice to learn your own chart and chart markups. Alright, so we have a little bit of a big push, right? As we've just spoke about, we've been pushing up pretty aggressively. We broke this high, we've pulled back down, and then we just took off in the afternoon. And we basically just sat around here. London's even pushed up even further. So what we could expect on a day like today, like on this kind of movement, is some kind of clean sort of sweep of the high and then retracement, if that makes sense. So something along these lines. We take out London high, we pull back down into an area, and then we continue the move back bullish. To me, that's a pretty reasonable movement on here. How far we come back, I don't know. The alternative is that this has been such a big pump for the last, I don't know, couple of days, right? We had the first big pump, like here, when Trump first did it, a week back or whatever that was, 1, 2, 3, 4, 5, 6 days ago. And then we had yesterday a big pump up. And so we are pushing pretty aggressively. So we could be in for a bigger retracement. But you can see here, like this one, we pushed up, we pulled back into just this area, we consolidated, and then we blew up again. Same thing, we gapped down, came to the same area, and then we pushed up again. So, the key areas that I'm looking for, really, it could come as shallow as here, it could come just back up to the retest of this high, and bounce and continue. Or, alternatively, then it could come and break. So, all of those involve a push up to sell back down, and then finding this key area from the internal liquidity to push back to external. Alternatively, we could have just swept the high and made a new high, and then we're just coming down, and we could actually get something more aggressive where we come back down directly, maybe take out Asia at best, potentially into this gap, and then just blow straight up as well. So if it shoots down, I don't know if we will get an entry. There's plenty of room coming down. Like there's still 168 points, so if we can find an entry, I don't mind that, but in terms of the 15-minute, there's no real entry model apart from getting like a change of character, and then we haven't really guaranteed that we've got the liquidity, so it's not the easiest to trade straight down unless we get that nice push up to grab the liquidity first and then come back down, if that makes sense. Now, there are a couple of fair value gaps in here, so what we could see, right, 15-minute fair value gap here from London, 15-minute fair value gap here, so we could easily see potentially price just coming into this and then pushing back up. So alternative lower time frame stuff, which is kind of what we're more interested in, we could see price come down, grab this, push up, grab this, and then come down, or even further, come down, sweep the London low. If it does that all the way down here, I would be more inclined to think that it may actually just then could even break new highs. So it's a little bit of a choppy scenario. There's plenty of options. But we really just have to wait and see. So if it comes back down into a key area first without pushing up, we could take a buy opportunity. Usually I'd happily take an IFVG or some kind of bounce from here. Today, because we have been pushing up so much and we've already kind of swept the high, I would be a little bit more cautious on just taking that initial trade. I want to be, maybe make it sure it's a little bit clear. Make a low and then sweep that low and then kind of give us the push back up. But there's still 100 points from there to there. This 15-minute fair value gap could act as an initial bounce, but I don't think I'd take it. It's a bit too aggressive, a bit too small, and may happen too quickly. So in terms of the NAS, I'd like to see it come up the top, reverse, give us that change of character, an actual confirmation that we're going to go back down and not just break to the upside, and then trade it back down. If it comes back down first, we're looking at the Asia low, we're looking at this fair value gap, we're looking to see how it behaves. And although we could get an IFVG because it's internal liquidity, I do want to just be making sure there's a right R2R. We haven't slowly come down, we've actually shot down and then given us a good R2R in order to actually take that trade back up, if that makes sense. There's also this key area of liquidity inside London low, which if we're not really going to push up first, we may pull back, grab this internal liquidity, push back to the London high, and then make the reversal back down. So that could also be a play where we see it come down to here, push up to the previous London high, and then reverse to come back down even further. Now let's quickly look at the Dow, because the Dow we have, I know you guys trade the Dow more, I've got 10 minutes on that.
Eddie just messaged he's not going to be on today. Back tomorrow.
Okay. Thank you. Okay, so on the Dow we do have a little bit of a similar story. I feel like we've kind of not really got much support on the way down here. We've got this. So there's a lot of fair value gaps in the higher time frames, but I didn't draw them all up because otherwise it'll just be full of color, right? This is a 4-hour fair value gap with the 50% retracement inside it. So that's a pretty key area. So if we come back down, that's kind of an area where I expect maybe it to come to. We also have this little area of supply and demand that's just here. So this to me is also a key area where price may come down to. So it may just tap the 4-hour fair value gap. Do you know what I mean? Might not come down to 50% retracement, because here is an order block. It's the last little order block that created this push. Lots of volume came from this, and we've left a little bit of liquidity inside the 4-hour fair value gap, so we could see it coming down, grabbing this, or maybe sweeping that and then pushing back up. Again, not really too much concern for me, because I want to get a trade before that. That's 400 points away. If it does come down there, shows a complete reversal, sure. Again, looking for the same kind of movement. We may have already created the high, but ideally what I'll see is a sweep of the London high, clean reversal, coming back down. Okay, we have a very tiny 15-minute fair value gap here as well. We did actually get an Asia sweep of the low plus an inversion fair value gap to push back up, so we could see that actually blow straight up. But there's a lot of wicks at the top. We're inside a 15-minute sell fair value gap, so this could be high, low, retest internal. So what happens sometimes when we're reversing, right? We sweep the high, we create a new low, we come back up to internal liquidity, which is right up here near the order block, which has pretty much been tagged. If you take this order block, the 50% is pretty much right there. So that would be the maximum point I'd expect it to pull back. And then we're looking to see this kind of movement back down to create new lows. So it could be that we don't get the sweep of the high today, and still move down, right? In that term, we've actually kind of reached the area where I would expect a reversal. I would prefer it to sweep up high, give us the chop reversal, clean movement back down, showing us that we've taken out the high liquidity and that we're coming back down with some force, and we're actually going to make the move all the way down here. That would be better. If we do start to reverse here and have a clean lower time frame chop, now if you look on the lower time frames on the 1 minute, we've kind of been ranging for a little bit because we had a big spike up here. We've just kind of gradually moved, right? We had a couple of big spikes. So we've got to be cautious of what we're going to utilize here. Like, there is liquidity, big liquidity came from here, right? And there's obviously this one down here. So we could potentially have this be the reversal point. We want to see clean movement and then making sure there is enough R to R, but just make sure that, like I said, there is enough R to R. So it could be that this sweep of the high was the last sweep and that this is actually the reversal. Sometimes that happens before market open. We've got 7 minutes. We had the reversal, we've created a fair value gap. So after this sweep, we came back down with volume, we created an inversion fair value gap. So we could actually just retest this closer to market open and then just drop at market open. But I'm not going to use that as my entry model. I want to see what it's actually going to do. Do we come up and take out London High in reverse? That'd be ideal. If we come back down here, I'm not just going to sweep it into the fair value gap. What I'm going to wait is for another chop and maybe a continuation trade that comes down, because there is plenty of room to trade down this way if we do have continuation. I can't measure because I'm inside this, but there's 40 points there. I mean, maybe the open will just come and take all this out straight away. You never know with the New York Opens. So we've got a few minutes to go, 6 minutes. We kind of pull back, TDI shift, unshift now. So we're kind of getting still bullish signals that are telling us we're going to go higher. London High being right there. So we'll see if it wants to take that out before reversing, which would be, like I said, same as the NAS, my ideal kind of move. If we drop from here, I wouldn't be surprised, but I probably wouldn't take it as an entry. So I think I am predominantly, I mean, the market's been so bullish, so I don't want to say I'm bearish because it's kind of going against the trend, but I'm actually probably more bearish, right? I want to see, after this big push, I want to see we actually have a change, because we actually did. We did get, if we look on the hourly, we did get that change. We had push, close below the low, right? So we did actually get a change, a lower low, telling us that we could be shifting. And when we get that, we got to see what this does. Does it create a new higher high? The thing that I didn't mention is if we get a break of structure out to the top side with volume, we could get this, and it could just continue the bullish momentum. So, and that's not a bad thing. If we do break London High with volume and create that sort of break of structure to come back and retest that, I don't mind taking that retest entry that we like so much. If we do pivot on that, just be ready to take the exit, because it could fake out and come back down. And if we take a loss, we take a loss. That's part of trading a breakout. You take the breakout entry, you trade it with the aggressive stop management. If it turns on you, it turns on you, and you take a loss, hopefully mitigated. It's just part of trading.
Yeah. We've also got a weekly high sitting between the London High and 1 hour fair value gap, so that could be another.
Oh, nice. I didn't mark that up, but that's a good point. Let me see. Often this comes up on this indicator. Okay, it hasn't. I've got the weekly high at the London High, basically, or just. Like,
really on mine,
we're talking 10 points.
20 points.
Yeah, okay. Yeah, mine's about 7 or 8. Yeah. Okay, that's cool. That makes.
So that might just be, but it just before the turn.
Yeah, so it may actually go up there and get that. But I mean, like I said, I could see it reversing right where we are. I mean, it's showing that. It's actually showing a really nice reversal signal. We came up, we swept that, we got the inversion, we came into that inversion fair value gap. We created another inversion with a TDI shift down. That's a really, really nice move. If it wasn't market open in 3 minutes, I'd probably trade that, to be perfectly honest.
Yeah, sorry.
No, that's okay.
That makes me hesitate when it's so close to those highs.
Mm-hmm.
And turns. That always makes me nervous. And I'm straight.
Yeah, the thing is that we already had a big high, right? And then we swept that high quite aggressively to create a very wicky high. And so to me, what that tells me is that this could have been the high that was set in London, which was the right time, and then we've already swept it. And so usually what we wait for is the US to open, sweep it during the US, but sometimes we get a little bit of pre-market, like what was this, like 8 o'clock or something? It wasn't too much earlier. It was 8:30. So that was after the foreign exchange market opened. So that could have been the sweep, right? What tells us is that is the sweep, and then we pull back down, we create a low, and then we come back into a key internal liquidity, which we've got here. Right? We do have that on both the NAS and the Dow. So it may be that it's already done the sweep. We pull back, and now we're just pushing, and now we're just waiting for that push to happen. So that's the problem with this setup, is sometimes it happens just before market open. Market open comes and it runs with the move, but I don't want to be trading without real definition, like before this close to market open. This would have been potentially an entry, but I don't like taking it there when if it's a clean sweep right before and a really good entry, sure. But right now, when it's like a couple of minutes before, it's not clean. It could be from before. And then we're kind of coming into fair value gaps and stuff like that. It's just a bit messy, right?
Yeah, exactly.
So we just want to be very cautious, and patient. Now it may mean, and this is one thing I talk about, is accept the miss. It may mean that you mark up the charts and it just doesn't quite align and it goes. Maybe market open takes the move where we want it to go. But if you don't trade market open, you don't take that volatility, then it just happens that sometimes the markets line up with your entry and you just can't take them. And that's just the way it is.
And that's the psychology part.
Yeah, exactly. And see, like this is a really nice. So this here, break of structure, right? We have beautiful movement here. So that would have been an entry that I would have been okay taking, and target would have been pretty much here. We have a break of structure. So this is actually one, if this was in our session and not stepping into market open, this is a potential setup that we could trade now. We've actually got the entry, break of structure with a fair value gap. It's closed. So we'd target this as our entry. Let's sell this so we can get paper trading going. We would put a sell limit in here. But because it's market open, I'm not going to do this on my live account. Also, the R to R, I don't know what I'd have. 30 points is actually not bad at all for a stop loss for the Dow. I mean, you could easily go any of these, to be perfectly honest, to really tighten things up with a good R to R. But seeing as it's market open, I'd probably bring it at least to here. And you're looking at your TP down at this 15 minute. That's a 1 to 2. See if market open triggers it, and that would be the kind of play that I'd do if I was more aggressive on that and traded in market open, but I don't. Right, here comes market open now. Wow, I feel like there's a massive delay in something. What? And it almost got it. Did it get it? It did not. Just. That would have been a nice entry, but it did not get it. Did not get it. Just missed it. Nearly got it. Nearly. And it would have tagged. If it had have gotten it, would have tapped TP as well. That would have been beautiful, but woulda, shoulda, coulda.
Market open, yeah.
Yeah, you don't trade market open, so. Tell you what, I am thinking about it. Been thinking about trading market open for a while.
I know. I have been too. There's often just some beautiful when they line up like that, when the setup is all there.
Yeah. Yeah, so with this one, it just kind of came beautifully. Like this would have been my target, which has been hit. And this was an entry. Like this TDI shift down, inverting that, like that was an entry. I'm still very nervous trading when it's only, 3 or 4 minutes before market open.
Yeah. And then if it's one of those really wiki market opens, it can just jump your stop loss and then go the other way.
Yeah, it can create chaos quickly, yeah. It can. So the NAS came down, came into this area that we had marked up, grabbed this liquidity, 15-minute fair value gap, just didn't touch it. Came back up for a true shift shock, a very aggressive true shift shock, and actually came back and retested. So that was a potential entry up to market open, but I did not see that because it all happened pretty quickly. But this was a true shift shock. Gave a little bit of a pullback. The R to R, and I didn't have any time to check, so that would have been 20 points, 30 points, 35 points. So just enough for a 1-to-1. Not really the most ideal.
Interesting, just opposite moves completely today for the two.
Yeah, they are a little bit.
Yeah.
So it looks like we're about to take out the highs from here. So if we can take these highs out and come back down, I don't mind that. Got to obviously find an entry model. Now if it does... So we just tagged it, didn't we? Did we make a new high like that? Is so close. I think we did sweep it. So we did just sweep that then. on the NAS, but it doesn't really leave us with an entry opportunity. There's no entry model of mine that's going to trigger anytime soon. So for me, what I have to kind of wait for it to sort of consolidate here and then show reversal. And it may just push back down. I don't really have a valid... Although I believe it will come back down after sweeping this, I don't have any valid entry models that will allow me to enter this. So I'm just going to have to be patient here and allow it to do what it does. See if we can get a little bit of a consolidation and range. So we took out all this, so this could disappear because that liquidity is being grabbed. So it did come straight down. So I wonder if we're going to pull back up and come on, pull back up, and then reverse and come back down. Continue back down is what I wanted to say. So that's been invalidated. It is a big order block. Might just bounce from here if it's going to continue to push bullish. Okay, now I've still got this in here for a couple of reasons. One is that it didn't quite trigger. So if that move, like if this was not market open, I would still validate this move if it actually triggers, because there could be an imbalance and a touch retest here. But I'm not going to trade up my live account. I'm not too confident in it being the live account because of where it's come from. But there actually is a great R2R now. There's plenty of room back down to previous lows, which is 70 points. Yeah, so that was kind of what I was expecting, but again, it did not sweep, right? I wanted to see this, didn't quite get there. So we just have to keep an eye. And now the NAS is taking off now.
Oh wow, look at that.
Man, when was the last time on the NAS that we're... Okay, we're in a big 4-hour fair value gap on the NAS. It's February. Okay, now it's swept it. And blown straight through. Where the fuck is the chart? I haven't been at these highs in ages. Okay, Jesus. Okay, let's have a look now. Okay, that's a nice rejection there. This is a bearish engulfing out of a fair value gap here on the Dow. If this closes, let's get rid of that. With conviction. Oh, man. It's TDI shifting up. So potentially what we'll see is it might sweep this first. No, I'm going to hold off on that.
Have an indicator candle page number 15 to mind you, or 7. Well, indicator on 5.
Beautiful TDI down, TDI shift up on the 5 as well. That is a very beautiful, beautiful pattern.
Oh, it's going for London night.
Yeah. Okay, let's see what it does here. I think it might take off here, to be honest.
I think so too. Seems to have that feel about it.
So there is an opportunity to enter here when it retests the London high. There's also an opportunity to enter here when it retests this high, if and when. But it looks like we're getting a bit of a push. Yeah, that's a big push. So it's actually a breakaway gap we're about to get right now.
It is.
But I mean, our R2R on this isn't going to be very good. I mean, where are we?
Taking out the weekly high. And a London.
We could get it a 40 point. I don't mind that. If this is actually gives us the entry. If I have time, I don't mind this if it pulls back. So it has to pull back if I can get set up. But it basically has to pull back.
Order submitted. Order submitted.
Hand one? Oh shit, wrong one, get out of there.
Order canceled.
MYM, 40 points. That's what I want. I don't think it's going to get it to us.
Order submitted.
So what I was looking at is buy limit here. If it comes back down, to buy off that. No, that's what I'm looking for, is this. Well, the NAS coming back down heavily there.
We're just total opposite.
So there's no.
No.
Yeah, I know. So I've set this buy limit, but I do want to be careful because I can't buy, apparently on Apex, you can't buy and sell the DAO and NAS at the same time. So if you're in opposites, it's a flag. So
Really?
you can't. Yeah, I got a warning for it on my track record way back, but I forgot about it. But I was just looking at them yesterday and I was like, oh shit, what's that for? And then I remembered. So. Yep.
Yeah, went right to that hour fair value gap.
Okay, so that's definitely more of a breakout on the DAO. The NAS potentially reversing here. We did just retest that fair value gap, but there is room down to here. Checked it heavy off here before. Well, that's a big pushback from. Was there a key level there or something? Did I miss something?
On the Dow there was, it just tabbed the 1 hour fair value gap. Wicked in, wicked out, but covered the whole thing.
I don't really have that, but I'm a bit nervous about keeping my buy line there now with that big rejection.
This 1 hour fair value gap is from way back March 5th. Never been hit.
Okay. We'll see if it comes down and retest this still. We'll see how it plays. It may bounce a little bit. Like the NAS is giving us a strong rejection off the London high, which is talking more towards a continuation of the breakout. So we'll see. I would have liked that to come back down then and bounce, but where we're at now, setting up for a potential M pattern, which wouldn't be so much of a bounce, it would be more of a push back. Do we leave it on? Do we close it? Do we leave it on? Do we close it? Let's see how this candle closes. We do have a potential chock here now on the NAS, but I'm unsure if we're going to come back here, to be honest. with that being invalidated after coming back down to market open push, you know, we had what, 1, 2, 3, 4, 5. That's basically retesting the 5-minute first candle market open. Invalidating that, we may just continue the push up now. If we get some kind of big volume push coming down here, I probably will get rid of this buy, but if it trickles down a little bit, still don't mind this, because we do have that London high news fair value gap breakout, so, and I'd have my stop loss probably 40 points. Oh, 40 points is actually pretty tight. Maybe I need 50 or 60.
Stop loss right now. Tight. So the next key area I have, if this keeps pumping up, is daily fair value gap.
Yeah, I don't think there's much until a bit further up, so that's why I'd like it to come back. Yeah, that's why I'd like it to come back and tag us so we can get that continuation, but we do run the risk of this being a sweep and then pushing back down, but at the moment this was quite strong. I don't mind that being, you know, you can see here on the 5-minute it's much more of a breakout sort of movement, but that doji wick is also not ideal.
Yeah, it's a major doji. First 5-minute open.
Yeah. So we'll see, it's coming down pretty aggressively towards that entry. It's a strong candle. How big is that candle? 43. Is that going to create the chock? Yeah, I've wicked off it. We'll see. I've still got the position in. We'll see how this candle plays. And if the entry plays, we'll just manage it as we manage it, right? There's still bulls coming into the market around here.
Yeah, we've got a tussle going on.
Maybe we'll just take out this sweep and not actually get down there. There is a fair value gap here that it looks like it's just tagged into. Not on my broker, but there is here.
Your broker doesn't?
Not this fair value gap, not this one. It's got this big one, but not the small one.
Oh, the big one. Okay.
So we'll see. We'll see what happens here.
Okay. Yeah, the big one's the only one I have.
Yeah, we may have been missed on that one too.
I don't like it when they don't let us in on their game.
I know, right? They had to just come down a little bit further.
Sad.
I could already be 50 points in profit, but they just decided not to.
Yeah.
That's
the wrong one.
Yeah. So there is a 1-minute IFVG opportunity on the NAS right here, if this plays. But it's been pretty aggressive so far. And I don't know if the R2R to that chock is really going to... What I do like is we created the 1-minute high, and then we swept that 1-minute high, and now we're coming back down to invalidate that. But by the time it invalidates it, our R2R is not going to be that good. Doubt
you have
you.
your flags and diamonds, your warning signal showing on your cloud indicator.
Yeah. I think.
It's almost like it's your version of the heat maps. I'm going,
Is it?
yeah.
Is it accurate?
This was pretty accurate. On 1 minute, just now, where
Nice.
all that. Yeah, it's accurate.
Nice. Oh, what's this gonna do? What's this gonna do? So we're getting quite a bit of, like, the bears are coming down, but every time we get down to this area, we push back up. So I'm still holding on to this position because I feel like if we come back down, we may get a nice kick off here, but it's just not quite, it's just getting to the lows and then pushing up, getting to the lows. So I'm looking for it to get it to a substantial low and then kick off, but mine still haven't been tagged. It's just, we're still 10 points or so away from mine entry. 20 points maybe. But I am being patient. I'm going to hold out. That was the entry that I wanted. I'm not just going to jump in early. And again, I'm going to manage it aggressively if it comes down to that area. But 1 minute fair value gap that was created here is now pushing back up again from the NAS. So still quite a bit of bullish momentum. But again, just not lining up with our strategy. Come on, come get me. It's getting pretty close now. Oh, that was it. Oh, you kidding me? It didn't get me.
Really?
It literally touched it, but did not take me. Oh no, let's see if it's going to push down now, if it's going to... Okay, that got me now. So we'll see if this is going to close below or if it's going to bounce from here.
Order filled.
I would like to see it push back up, reject that true shift entry, and go retest the highs. Well, that was a good push up, but the fact that that's rejecting is a little bit concerning. "15 seconds. What do we got? Close bullish. Well, we did. Is it going to push bearish now, or is it going to be...
I want to test a little bit farther into the 5-minute gap.
Okay. Well, let's see how this candle closes. It has to push back up, otherwise I'm going to be out of this trade. That'll be it. Push back up now. This closes bearish engulfing, I'll be out of this trade. Basically. I've got left 30 seconds. Okay, can push back up now. Leave the wick there, push back up. It's doing a little bit of it, but not quite what we want. It's got to push back up and flip bullish, or at least not close bearish engulfing. We've got 4 seconds left. Okay. Not a fan of that. I'm going to get out if it pushes any more bearish. I don't like that close. Alright, I'm out of that trade. I'm out of that trade. Minimal loss. TDI shift followed by bearish engulfing is not where I want to hold on to. So the other position that I was looking at getting into this trade was here, right? So if it bounces off of this one, this is actually where I was also looking at getting into it. Also inside FEG. No, that's not what I wanted to. So if that closes a very, very doji candle, I actually don't mind that because we've just come into the cloud, we've bounced off a second area. We could have a very aggressive trade, but it has to close very, very doji, which it kind of did.
And this is kind of nice now too because it stretched the midpoint of both the 1 and the 5-minute fair value gaps. So
If it starts to push bullish, I'll enter, but at the moment it's just pushing bearish, so I'm not going to enter buy as we're pushing bearish to that wick.
could end up working on a bearish 5-minute FVG.
Yeah, so right now, as it stands, I'm looking at it being more of a... Let's see if this candle closes bullish engulfing. How long we got left?
12 seconds.
Oh, it's already flipped bullish. That was a bit aggressive, that entry, but...
Oh, that's coming nicely out of the gap, the 5-minute gap.
Yeah, I actually wanted to kind of get it as this flipped bullish, but I was a bit late. So I just want to be careful on this and make sure that we protect it properly. I'd like it to confirm that TDI shift up if it can. We got left. I don't want to see a big rejection. Whoa. Come on, let's get up there. Confirm that TDI shift and continue to push. Just doesn't want to give us a nice candle, does it? Now we're not in a very good protective spot. Go on. Get out of there. There we go. Come on. Keep going. Just doesn't want to get up there, does it? True shift rejecting again. Alright, if that doesn't confirm the true shift, I think I'm going to be out of this again. I had to break even kind of position. Let's get a nice true shift. 10 seconds, push up, give us the true shift. At least come retest those highs. That's better. That's what I wanted. Whoa, big gap down on that. Let's, yeah, I need to probably lock in some more of this. It's probably going to get me. Shit. That gap down is not ideal. Push back up. Candle, push back up. Let me capture some of you.
Order filled.
Oh well. Took some profit. Didn't quite get what I wanted to. My trail unfortunately got me stopped out just as we're starting to go back up. Let's see if it got all of my copy accounts because I don't want to stop out. Oh, that's what I thought. Okay, let me go to my, where is it? MYM. Okay. Flatten all. Yes.
Order filled.
Make sure that I'm out of all that. Sometimes I hate it. The trade copy is good, but in that particular case, it was like just on my stop loss, like just. And when that happens, sometimes it misses some of my orders, and it actually missed my two big accounts. So it actually worked out for the better for me because I was able to take some more profit on them, but still, I just had to be very careful of that one. Yeah.
I guess it's a draw in the long run. I think it's made a mistake.
Yeah, so it was a nice push up. We managed to get some points on that. Unfortunately, didn't get. I kind of gave half of them back on this pullback, but I could have managed that trade a little bit better. I was hoping to get it as this flipped bullish, but I actually got it up here and then went up almost 40 points, but I moved my stop loss up to here a little bit. If I had maybe left my stop loss where it was, it may have tagged it, but I then trailed to 25 points, so a little bit over 1%. But
So which candle did you get in?
so I had this area as this entry that I was going to take. I was going to take it from here or from here. That was my plan.
Right.
I took this and it didn't bounce, and so I got out almost break even. And then when it came and did the same thing, I didn't actually have the order set, right? And so what I was waiting for is, okay, this is where I wanted to get in. If this confirms this by pushing bullish engulfing or pushing bullish, then I'm in. So the original entry would have been here, but I wasn't set up for that. So then as this closed doji and this started to push back up, I was waiting for this to flip bullish, and it did, but went quickly, and I missed that. So I just took the candle as it kind of closed here on this bullish engulfing. So that was my ideal entry. And then as it flipped up to show that we are falling bullish, that was the entry that I wanted to confirm that this move was actually true. Then my bullish engulfing candle was the final confirmation. And so I had a pretty tight stop, right? I originally was going to have, basically, when it flipped bullish, I would have had 20-point stop. And then it pushed up a little bit. So I had a very tight stop that left me with 1 to 2 being just here. But actually what I did was I thought, well, logically it's going to come up probably to here. So I moved it just a little bit higher. And then as it got really close to where the TP was, my trailing came up. And then it came up to basically here, and it just got me by like literally a bee's dick, and then took me out. No, that's okay.
When you're saying that when it pushed bullish, so do you go in before candle close? You just want to see the action?
In this particular case, I would have gone in before candle close, yes, because it triggered the entry that I wanted, and then behaved exactly how I wanted from that trigger, but I did not get that trigger. So I'm not just going to chase the market though. I didn't get that. So what I'm looking for is extra confirmation that, because the best part about this is the R to R. From here, if I had have got that, I would have been in a great position. We would have had a killer entry, and we would be in a great spot. But I didn't get that. So just rather than just chasing this doji candle, if this next candle starts to push bullish, so gets it above this wick high in the later half of the candle. Now this is very, very like, I'd say next level entry stuff, but if it starts to push bullish from here in the later half of the candle, so we're talking the last 15-20 seconds, to me we've already had the push down, and then we've actually, so that was the push back, and then this was the real move coming, and then we got confirmation that we're getting above this high, which is kind of like a breakout on like a 1 second or a 5 second, whatever you want to talk about, and then you can confirm it. Now the fact that it closed bullish engulfing here was great. Now if it had done that and I had entered and it had closed here, I would have had a very tight stop loss, and I would have been very cautious on this. But even if this closed doji and didn't close above here, this is a very nice ME-esque pattern. Also, it's come back to the cloud, it's bouncing off the Bollinger Band midline, it just had a lot of things going for it. And so for me, I was like, if it pulls back here, which is what we were waiting for, and bounces, this would have been the sniper entry, the one down here, but I was too afraid of that, so I went this one. This one played beautifully, and what I was looking for is it to come up to here. Unfortunately, my trade management, I was a little bit too aggressive because I had a tighter stop loss, and so I didn't get to my TP, which would have been smashing now. But lo and behold, this was the beautiful entry.
That's great, because I know sometimes I've been tempted before candle close. Yeah, when there's that many things going for it.
Yeah, especially in a high volume area. Like we know that this entry, if it goes, it kind of hits and bounces. And so in a trade like this, you could have got an entry here and waiting for this to close bullish. What if it closed bullish engulfing up here? So we're talking about 50 points of the move, right? And so we've got so many confirmations, and the last little bit for me was like, yes, I missed the perfect entry, but as it pushes above this high, that's confirmation that we're going to get it too. Now, like I said, unfortunately I was a little bit slow when I ended up trailing it up here, but I still don't mind that as an entry. It didn't give me the best R to R, and I was in a more vulnerable position because I had it set for 20 points, and then I think my stop loss actually ended up here, so I was either over leveraged or in a bad stop loss position, but the move continued on, and I was able to move to break even and get protected pretty quickly. And it did come to my TP, I just trailed it a bit too aggressively, but that's okay. This is one of those things with those auto trailing. Like, they're good, but I think if you get the right move, they're not so good, because to me, I would have expected to come to here or up to here. That would have been my targets. I would have been quite happy with here. I would have had probably, what is that? My entry was here, 60 points. That's a 1 to 3. So would have pretty much definitely hit my TP, but unfortunately I was a little bit too, my trails were a bit too aggressive.
It really is a beautiful setup. Looking that not in every way. Right out of the 1 minute fair value gap that it's tapped a couple times, midline, the cloud entry, the MES, like.
Yep, it's got a lot of things going for it. Yeah. We did just have another break of structure, but the R2R on this one's not going to be that great. This kind of break of structure, but we're only going up to here. So I could also see, actually maybe not. I was going to say I could see this inverse here and start to push back down now, but I think it's just in the middle of nowhere. I'm not going to really touch it.
Yeah, I agree. There's just not as much momentum happening right now either.
Yeah.
That's a really nice set of momentum.
Yeah, it's unfortunate that the management wasn't quite on. I think, how many points did I get from that? In the end, I only got like, entry was 36, stop was 66, 30 points. 30 points, not too bad. So 1.5%, I think.
15 out of that. But it was late.
85, what was my... Oh, that was the wrong entry I'm looking at, I think. Oh, I don't know. Entry was 46, that's why. Exit, I got 20 points, that makes more sense. So 86, yeah, it probably would have hit TP if I had left my TP. Okay.
What was your TP set at? How many points?
On this trade, it was only set at 40. 50, I think. 50. So I could have... would have been close. Would have been very close. But I moved it up. So this pattern's quite nice. When you see like this doji sweeping something, if it's got another confirmation of some sort, like it's actually coming down to a key area, or it's looking like it's bouncing off, London High, like a London High retest or something like that. This doji candle is actually a really nice entry that you can take, and you can also get really, really tight stops by doing it. You can even, at this point, 9 points, I probably wouldn't take that, but I could go 20 points down to here, and then if it does push bearish, I can get out early and take an exit at half risk. Because we'd already be at 1 to 1, and the risk to reward on that would have been 1 to 2 for sure. So just these kind of patterns can be quite nice. Now we are actually getting a change of character on the NAS and a push up, and we are. I actually quite like this because it's off London High, right? So we've pushed up, we've come back down, we've created a low, but the fact that this is lower and the fact that we're in an hourly fair value gap makes it a little bit harder for me to want to enter that, because when I was painting, I was kind of keen for it, but again, we have to just consider that. Oh, there was a fair value. I didn't see this, but there was a fair value gap off London High, off the previous London High, which we've then just come and swept that. So maybe I could have justified that, but I would say it's really pushing the boundaries of what we regularly trade as a trade setup. So for me, whether we take that or not, it's really, like I said, pushing the boundaries and a little bit of like a stretch,
if you were going to enter that one on the NAS, what would
Yep.
be your entry candle?
Yeah, good question. So I think this is a little bit of a unique scenario, like because it's the London High, because we haven't really got a key sweep or any, like, it's not dipping into a 15-minute fair value gap or something. But if it was this doji candle closing like this
Yeah.
after sweeping this, could easily be the entry candle. So we see the sweep, the doji candle sweeps, right? And once that closes like this, you can basically enter that with the stop loss below here. It's a very, very aggressive move, right? Because we're kind of really trying to pick the reversal. But when the higher time frame and everything shows me that that's happening, and this is kind of like an absorption, it's gone into a key area and then pushed back heavily, swept lows, gone into a key area, pushed back heavily. This candle shows massive reversal, a massive absorption, and usually if you can find that with a sweep and a key area, that can be a really good maneuver. And the thing with that is, though, once, like, if the candle starts to push back down and starts to kind of close bullish and bearish engulfing or get below here, you know that that was false and that the bears are still in the market. So you can look to get out pretty quickly. Or, like I said, in this particular case, I could have had a stop loss. I wouldn't usually put a 10-point stop loss. That's a bit too aggressive for me because anything can happen, right? So if I had have had a 20-point stop loss protected against this low, once price starts to get below, once price gets below here, I could close that out at a 50% loss, so like half risk loss, and then I still would have 20 points. I mean, my TP right at the top is 1 to 2. My expected one, which would have been here, would have been still 1.5.
Very reasonable.
Yeah, so it still had a decent R2R. You could have got a pretty aggressive scalp in there. But like I said, I liked it for a lot of reasons, but it just didn't quite, like, if this maybe, like, if this was on this chalk, but also getting above London High somehow, that would have been okay. But the fact that, like, if it was this one where it had have swept, but then closing below London High or the previous high, I would have been a bit iffy again. So
Exactly. Yeah.
it's a bit of a hard one.
Well, it is, but like aggressive scalping, that's what it is, and that's the art of it, isn't it?
Yeah. Okay, so we're both taking out the current highs. I don't have my charts marked up really enough to go back too far to see if there's key levels, because the Dow, we haven't been up this high in ages on the Dow.
No, the only thing I have on Dow is daily fair value gap, and this is 430 points away. And that's the only hourly that I've got. It's way up there, 4 hours. Yep, 2 points up. Yeah, they're all like up.
So I don't mind this for a reversal. Like if we collapse on this, basically, what I'm saying is if this doesn't hold and we come back down here, the problem is for both the NAS and the Dow, I don't have an entry model that's going to present very quickly. There's no IFVG that I could take, and the thing is we're kind of like, it's not really good to take an IFVG from external liquidity, which is kind of where we're at. We're pushing highs in a bullish market, so you don't really want to take an IFVG from there. But the chock's all the way down here, and so we're not actually. So what I'm expecting is to fake this out and not really get it and short it down to this low or this chock. But if I can't get an entry model into the chock, then I kind of defeats the purpose, right? There's doesn't really help me. So we may get a push back down here, and this may be a nice reversal spot, but I don't really have an entry. The Dow's just looking more bullish. It looks like it wants to continue up.
It really is, yeah. It kind of made its move out of the gate.
Well, I wish I was. Yeah, I wish I was in my demo account, because I'm writing this up quite nicely. 130 points right now.
Very good.
zoom out a little bit, see. What date's this? February 3rd, 15 minutes. Just a huge rundown, okay. Massive. So we do have this potentially. I don't think that's been retested. Well, that one. Or in fact, this one. Or this one. Okay. I feel like we're right at the 50% retracement, but did we? No. Okay, so I feel like we're at the 50% retracement on the NAS for this massive move that happened back in February. But that's the only level that I can really see. We're inside this huge bunch of fair value gaps, break of structure retests, but a long way for it to go up and continue up. And there's absolutely nothing so far. Yeah, okay. Yeah, so I don't even know if it's worth trying to look for just running. Is it really worth trying to catch this? Well, there's no key left. Do you know what I mean? There's nothing key.
I know. Yeah. Blank space out there for a while.
Yeah. I mean, we got in the right trade. We just didn't manage it or hold on to it. So, and we almost got into the NAS one as well. But I mean, there's not much we can really do about that. There is a bit of an opportunity here. It's pretty tight. Like just here.
Oh yeah. Yeah.
Stop loss 20 points. And not much. Plenty of room to the top side. So, I don't mind that. I could put that in for my demo. I mean, on my live account.
Order submitted.
We'll see if that's going to trigger. If it does, if it's actually going to bounce. But it might already go. Like the market does not really look like it wants to push back too much.
Crazy for me, but I have to see what happened on. There was my impact news earlier.
Well, in saying that, we did have another opportunity on the Dow too, but I missed that one. Fair value gap. Did create. Pull back.
You start where you seeing that? Where's the fair value gap?
Between
Yeah.
this and this, and it's just this break of. You can tell by on my indicator the red line helps a little bit, but
It does actually.
it's a pretty aggressive move. Okay, the NAS is coming very close to my entry. It just missed it. Oh, I just missed it. Oh no, then it got it.
Order submitted.
Big aggressive push, so if that doesn't push back up, I don't want to get out of that because that was a random bit of volume that came in. So we're going to push up here, or we're going to close below. I feel like we've just had a bunch of volume kicking the market, and it's not going in my direction. But let's see if we kick off from here. Continue the push up. This can flip bullish, that'll be quite nice. Not looking too strong. Let's see, is it gonna continue the push or is it gonna come back down? It's pretty tight if I'm gonna go that aggressive. Let's give this candle a second and see if it flips bullish. Definitely don't need to take a full stop. Still pushing pretty bearish. Looks a bit nicer on the other broker, but Naz is pushing back. The Dow's pushing back up after it's already triggered that. Let's see. Oh, Naz does not want to do it, does it? Push back up? No. Come on, push up. Okay. If this candle flips bearish, then I'm definitely out, so let's just protect that position, I think. Yep. Yeah, we're going to protect that. If this flips bearish, then I don't want to be in this trade anymore. I'll take a small loss. If it bounces from here, great. But my stop loss should be Lords. I got triggered in earlier on my live. But that's okay. Let's see how it plays. Hopefully it can kick off from here. Continue to push. Love this candle to close bullish engulfing. Yeah, let's go get above this high. Come on, let's break out of here. Let's not wick out. Let's break out. Strong. Okay, we're at a reversal point. Let's see if it's going to break or if it's going to reverse. Come on. 30 seconds. I want to see this candle close strong out of here. There's a fair value gap if it does that. Go on. It's looking better. Stay close like that. Close like that. Okay, nice. Close and continue. You allowed that pullback, now you continue. Fortunately, I don't have any key levels up here as a target. I mean, I got this one, I guess, which is quite a way. 50 points still. What do we got? Don't close doji. I don't want to see this Naz candle close doji. If it does, I'm probably going to protect, because usually a doji candle at this position is a keen sign for reversal. If we can push up and close above the high of that candle, then I could give it a little bit of room to continue on, but we've got 14 seconds, come on. Let's get a break. Oh, not bad. Let's see how it's going to close. Close above. Oh. Shit. That was closed above, but as a doji, that's not ideal. And that's going to be enough of a pullback. Yeah, if that doesn't flip from there, then I'm out. Push up and close bullish. Go on. Go on, push up, close bullish. doesn't close bullish, then I'm probably going to protect and just capture my points. Three seconds. Not doing it. Right, push up. Let's go. Push up. Push up so I can capture some of this. Yep. Keep going. Keep going. If it breaks out, I'll be stoked, but otherwise I'm maxing out here. Oh. Is it going to break out? Is it going to break out? Or is it going to wick back and take me out? Last chance, how long? 20, 30 seconds. Go on, go. Go, baby, go. Ah, Alright, I'm out. Closed nicely. I think it might continue. Oh well. That's alright. I really don't care. I'm happy. What did I get from that? Another 20 points. Again, not massive, to be honest, but I'll take it. I think I might have been a bit too zoomed in. I thought the candles were a bit bigger. I could have maybe given it a little bit more room, but that's okay. Wow, the Dow collapsing. Was there an entry here? There probably was. Did you take one?
Got in and usual and started trailing. So I did get points, but now I'm not.
How many points did you get?
I haven't calculated.
Oh well, that's okay.
It's that take me back to tax. $35.
35? Nice. So
I was a little bit hesitant again because there was the chalk form, but there was a fair value gap left behind, which I think is a really good setup, but it didn't go back. It was just momentum. And it pushed right through the 5 minute. Well, I guess that would be an inverse fair value gap in the 5 minute.
yeah, so we've just closed with an IFVG entry on the 5 minute, basically. So actually a sell opportunity could be right now, but I'm not really that keen on that. It's a 70-point stop. I mean,
Yeah.
there is a good R2R.
It's,
Oh,
the market is just feeling a little bit too bullish.
yeah, it's definitely very bullish, and we kind of broke over London high, pulled back, and continued on. So to me, I'm definitely like, since we broke London high and continued this move, quite nice. I'm looking at this as just a little bit of a pullback, and this is the first chop. Like, this actually isn't a chop, technically, because this was the highest candle, and no candle closed below this low, right? So technically this actually wasn't a chop. There was a CISD, which is pretty much the same thing, and there was a TDI. Sorry, go on.
No, that's okay. The CISD is kind of an earlier indication, and it's a bit riskier
Exactly.
than a chop.
Exactly. So just to clarify, like, lots of people have this sort of like confusion, myself included, right? I had it for ages. If we look at this as market structure, like, I'm going to delete this. This could maybe be a good lesson. Coming up for people, but this is something that happens quite a lot, right? People see this, and like, if we just take this, we had a downtrend, then we had a bottom, and then we came up, and people will go like this. This is the way the market moved. This is the bullish trend, but that's not actually true. Okay, if we actually look at it on this chart specifically, the actual move is like this. That's the move so far. And we're getting a little harder. I can't draw this because,
I'm seeing why.
yeah, I can't complete this because I don't know where this is going to stop close, but this is the general gist of it, right? It could stop here and come down, or it could continue up. But why is that so? Okay, and this is the really important thing. Do you want to have a go, or should I just answer it for you?
Well, it's because the original form that you showed, where people think that's where it has not broken the previous high.
So, not quite. So you mean by it hasn't broken this high? Is that what you mean?
Actually, at first that's what I meant, but no, there's width below that.
So it's more to do with the actual. It's quite unique, I guess. This is so. Before we get this pullback, if we look left. Well, first of all, if we look left, the highest bullish candle is probably somewhere to the left, so that's probably the bigger chop. But if we look at this smaller time frame, at this point in time, this is the highest candle to the left. This is the highest candle to the left here, and this is the highest bullish wick here, right? And then this is the highest bullish wick here. Now, what we have is we have an area here. This is the low of this candle. This is the low of this candle. And this is the low of this candle. So in order for us to get a pullback, what we need is we actually need this. Technically, if you think about it, we need a 15-minute change of character, or like a 15-second change of character or something to actually show that we're pulling back and we're getting a bit of a downtrend. So if you think about this on like a 5-second chart, this would be a bunch of candles, and eventually one would close lower than this wick low. Like one would close lower here, and we'd say, okay, that's a decent pullback. So the key aspect is this is the highest bullish candle. No candle has closed below the wick of this low, right? So we continue to push straight up. This is the highest wick candle. There's a low here. This candle did close below the wick of this low, and this one closed even lower. So that is an actual pullback. Then we continued up here. This is the highest candle. There's no candle closing below this wick low. And so in this particular case, it actually is quite difficult to get the chock, because the chock's actually all the way down here. The real chock on this candle is all the way down here, so we just kind of got it, you know, it's probably actually where this line is, because that's the wick low. So ignore that. That's the actual pullback. So therefore, the wick low's here, and that's the chock. We did just get the chock. We had a pullback up into some area, which potentially we could have taken a fair value gap, and then we've continued to move back down. But this one, yeah. But this one, not actually a true chock, because we didn't get a pullback. And so right now, you don't have the opportunity to take a chock of this candle closing. Now, change in state of delivery is it closed below the low of the last bullish push. So this is the bullish push that made the high, these three candles together. So once we get a candle closed below, which is actually a TDI, so technically here you've got a TDICCISD. A TDICISD entry. And it played all the way. Where did it play to? It played to our chock, the place we expected the first kickback. So technically, in this particular case, I mean, I don't take CISDs because they're a bit more risky, I would say. But in circumstances, we don't have an IFVG. Well, we actually did have an IFVG here, but now I'm really picking it like. Now I'm really being picky. We did have a tiny IFVG. So technically we could have taken the IFVG, and in this particular case it would have been a good place. Now I was in the NAS buy, so I couldn't take a sell, but this IFVG here actually would have been okay, because the risk to reward doesn't go down to here. That's not the chock. The chock is down to here. So our risk to reward on this, if we had have taken the inversion fair value gap here, put it above, I mean, that's super tight. I wouldn't have done that. I would have either done this candle or this candle for 25 points, and then risk to reward down to the chock. Wouldn't have been bad at all. We would have had 2.6, right? Then the TDI candle actually did give a change in state of delivery. We could have had that as an aggressive move, not a bad move either. Again, we don't usually trade that, so we're pushing here. We're pushing for trades that we don't usually trade, which we don't want to be doing either. But that would have been a particular trade. And then the next is the chock. So we got that down here. Then we're looking for a retest of some fair value gap. We did actually come into the fair value gap that created the chock. It's not 50%, so this wouldn't be a strong pullback. This wouldn't be something that I would say is, I'd want to see it come back to the 50% zone here because we've got a fair value gap here, fair value gap here. This is actually a break of structure, fair value gap. So realistically, what I would have wanted to see this low, right? Fair value gap, break of structure. If price comes back up here, that's where I'd probably want to be entering more than just back up here. But point of this is, where is the actual chock? This can be confusing. Now, sometimes we will use this. I have been caught up in doing this, but the problem with this is sometimes you think the chock is here and it pulls back, and then it comes down here and you don't have the good enough risk to reward. And by the time you get down here, you're wondering why the fuck it's bouncing so heavily and shooting up and hitting your stop loss. Well, it's because you didn't actually get the chock. Yeah, exactly. It's because you didn't. Exactly. Now, we did get the chock on this, so I do think that we'll come back up and bounce. But usually, imagine you get an entry here, and then you come down here, and this doesn't create the chock, it creates a wick. Then this bounces and comes all the way up. You're like, what the fuck? What? Well, that's why. That's proper market structure.
Yeah, that's so interesting, because this morning I was just reading again before market open the difference between CISD and chock. And
Oh, wow.
so, like, I have it in my head. And
Yep.
you know what's really helped me? I took a picture of the chart actually, is those arrows down from
Yeah.
the higher highs.
So that's you look to the left, right? You look to the left and find the highest wick high, and then you go, that's the candle. Do we create a break of structure down? Yes or no? But as you can see here, so the CISD, the market structure shift, in some situations, that's why it's good to have. That's why it's so hard. Like, this is my strategy, and this is what I do. It's like, yes, having that discipline can be good, and it can work. Maybe I've got too many things, and I trail too aggressively, and I could just let some run, and I'd be better off. But right now, this is a perfect example of, like, okay, I don't trade market structure shift because it's down here by the time the move actually happens. But knowing what a CISD is and understanding it's the same concept, and in this particular case, it's worth the risk because otherwise you don't have an opportunity and there's still good enough R to R in this trade, then you can go, okay, I'm not going to just randomly enter, but I know that a CISD has been presented. I don't usually trade that, but I can actually use that in this situation, and so I'm going to take that trade. Now, whether you want to be that lenient with your trade entries or not, I don't know, but this is kind of understanding more about the market and the way it actually works and the market structure shifts and the way market structure is can allow you to kind of get some of those opportunities that are so close to your entry but not quite.
Yeah, because that's completely what I'm finding. We get so close and not quite, and it's frustrating.
Yeah, but I mean,
it's also to understand each of these entries and then see what's going to fit for me as a trader.
Yeah. And I mean, there's the other side of the story where basically part of trading is being disciplined and having these finite ability to manipulate and take CISD here and market structure shift here, and it's really can be a double-edged sword. It's like, well, am I being disciplined or am I just picking and choosing what strategy I want to take? Especially if you're not like, this, I would say only really reasonable if you're kind of up to the stage where you're taking payouts and you're getting consistency growth and you haven't blown accounts and you're really defined on what you're doing. Even then, maybe getting to that stage is not done by that, so why change it? So I say that with massive caution. Like, no, trade a CISD or trade a market structure shift, or just pick one and do. It's good to know and understand the different situations, but it can also be, like I said, a double-edged sword where you're like, well.
Yeah. And I think that's it more that it's understanding. It's so much better understanding.
Yeah. And so this is a good example, right? This would have been like, we got a change in character, we're expecting a reversal, but actually, this wasn't a change in character. This was a sweep of the market structure shift. At this point, I'm not sure what's going to happen. My entry would be up here. I'd be waiting for it to come down, but then we kind of bottomed out. We didn't really take out the low again. We kind of created a double bottom. Now we're getting a change in character to the upside, right? With a fair value gap, which is telling me that potentially the market just wanted to come back, and now we're going to just wanted to pull back, and now we're going to continue the move. If I was to be looking for sells, it would be up here. So I don't really want to enter this as a buy. We do have this change of character actually it hasn't even painted yet.
Yeah, mine hasn't quite yet.
And it did create this fair value gap. So that is on the border of an entry. I mean, well, it did actually. This candle gave the chock.
Oh yeah.
See, my problem is that there's this sell opportunity that I was talking about right now coming up. And then this then this back and forth becomes which one's going to win, and then you realize that there's no key areas that have been swept. There's no higher, like, where are we? This is where you have to zoom out. We broke London Height. We're coming up to an area, but I haven't got an area. Do you have an area anywhere? No. So we're kind of in no man's land. Oh, I wonder if that.
The 5-minute was painting inverse fair value gap, but it's reversed. That's off the table.
We just got the inversion fair value gap on the NAS. Sorry. Actually, that also hasn't. I was thinking of taking this sell, but it didn't quite get the chalk. It gave an inversion fair value gap after sweeping that, but we're still pushing bullish. Yeah, I didn't. Yeah, no, I didn't. Didn't give me the entry. So we could have maybe gotten an entry up here, but didn't quite get up there for the sell. There was a fair value gap in here that, you know, may have been valid. I think I drew up the 50%, didn't I? Did I? I swear I did. Oh well, let's do it again. Oh, it's that the white line I see. I didn't, because usually it's a purple line. That's why I couldn't see it. So we came in to the fair value gap. Yeah, there is a fair value gap, but not quite in that premium zone. So it just went a little bit earlier. It swept that liquidity and started to push down a little bit earlier, but again, maybe that's not the real move. So. Let's see if that's going to come back up and trigger that entry on the demo account. I don't really have the confidence to enter that on my live account, to be perfectly honest. In terms of this sell, we had the inversion fair value gap up to sweeping. We did get the chalk, so now we do have a strong push down with a fair value gap. And what this entry would be was chalk, fair value gap on the TDI shift, and push back. If we come up here and we get a bearish engulfing out of it, maybe, but I don't know, I just don't quite have the confidence to. It's just the retest of that fair value gap is what this entry would be. And basically it would have just almost triggered now, but maybe I'm. Okay, that should definitely have triggered that.
Did it trigger?
It did on the demo account, yeah. It did. It did on the demo account, so it's like a 20 point stop. At this point, I wouldn't have much confidence in this trade if I was in my live account. I'd be nervous because we've kind of looking like we're getting a bit of a W here. So whether or not this was the right trade, I know for a fact that if I was in this trade, I wouldn't be comfortable with trade management. I wouldn't want to move it to here yet.
How many points did you stop?
20 points. just at the top of this wick, so 20-point stop. And I'd be targeting back down into this area, but either here or here. Either here for 33 or here for 50. Man, I got one of these pimples on the inside of my nose. They're so annoying.
Oh, no. Is it painful?
Yeah. I've had much worse ones, but it's definitely on the annoying side, that's for sure. I'm starting to get that push now. Yeah.
Oh, yeah. Oh, good. Going in the direction.
Starting to push down now, but like again, like I'm not in this on my live account, and I would not be. Like this is kind of where I'd expect it to bounce back up if it was going to. So I'd really want it to collapse and break, and it may do. And that I could get something that would be more decisive as like a break of structure entry if it does like push down and give a gap, and then I could maybe pull back and into that, which I don't mind. But right now, I mean, if I was in this on my live account, like I said, because I'm not too confident, I'd probably bring it to the wick high of this, and then that would be it.
Yeah. Goes the wick. Very good.
So it looks like Dow's about to trigger that entry from way back. I'm going to see how that will play. Okay, just triggered it then. I wonder if it's going to reject or if that's going to be... I mean, it's a pretty strong... To me, this is like accumulation, manipulation, inversion, fair value gap, which could have been an entry itself, and then we've just got a chock. So I'm not really looking for this to be that rejection entry that I was, would usually like to see. I'm thinking it's probably going to be more of a pullback and then continuation to push back to the bullish side. So...
Yeah, I was very tempted on the inversion side. Didn't take it back.
So yeah, as you can see, that's not playing out. That's just moving very bullish and very nice. So that gave a chock confirmation. Okay, so if that entry did get triggered, I'd bring my stop loss down to here, save myself 3 points. And we'll see. Now, I don't have a strong bias here because we don't really have key levels that have been hit. We don't even have like a full sweep. I don't know if we're really in between two moves. So for me, right now, I'm not really that keen on taking an entry on my live account because I don't have a real strong direction. Like right now, we've had a beautiful accumulation, manipulation. We did have the IFEG, which could have been an entry, to be perfectly honest. And then we've just had the chock as well. So we could get a pullback into here. So there's like a buy limit entry here, basically. But then I'm like in a sell looking to take a buy limit, which doesn't make any sense. And, it's just all a bit back and forth. And the NAS didn't want to make that trade. So I'm glad I didn't take that on the NAS because it's just taking me out. That's okay. Well, actually, it's come back into that.
Right now, it's just seeming a little bit more manipulative with the couple of moves that present sometimes in the...
Mm-hmm. was going to say, I don't mind this bullish entry if it pulls back to continue this move, but maybe I'm just pushing a little bit too much. What I mean is we just had that change of character, right? TDI shift. So what I'm looking for is this shifted up. Now we're going to pull back to the liquid 50, retest the TDI, but that would also be a pullback to this break of structure, which is where this buy limit order is, and then it would trigger the entry and then continue on. I'm not too sure if I want to take that or like on my live account. It's kind of continuing the move already.
Yeah, I was gonna say, is it even gonna let you?
Yeah.
No, we've got a IFBB in the
Back up.
Yep, back up.
Yeah, that's quite a nice. Have to close there. Still could close there, pull back, and continue the move up. What's the R to R that we could get on this one? 35 points, 30 points. Maybe I will put it in.
Order submitted.
That 5 minute close yet? Did it give?
Yeah, I did. Yeah.
Okay, nice. Okay, so I have put it in on my live account. We'll see if it plays. If it comes up to the highs already, like it's kind of already doing, and completes the move, then I'll probably remove it.
No, it's supposed to play by the rules. Like,
Well, my rules anyway. You know, play by my rules. Yeah, I think that IFEG was the entry there. I think we may not get the chance on this one. Okay, that's pretty much come into what could be the order block here and the potential 50% of that order block. I'm going to remove this from my live account.
Order canceled.
I feel like they could, like it could easily come back still, but the probability of a nice move coming from this has decreased quite drastically as we've, we kind of had this, and then what I was looking for is, a nice pullback, trigger me, finish the move, right? Completely reasonable. Potentially pull back and then potentially break and move. But what we got was a pull all the way up to here. Now, 50% still does come down to about here, but we've also got like the order block here that created this big push is right here, and a really, really good, like a sniper opportunity for an entry is actually the 50% of these order blocks. So you mark this up, and then you draw out this line, and we've just kissed it, right? So that could be that, okay, we've come into the sniper entry on that order block, and we've pushed off. Let me just double check that. I feel like, yeah, I can never get these lines straight, but anyway, we've basically just kissed it or we're about to kiss it. So for me, this is an area where last line of defense, if we were to shift bearish, would probably be around here. So the fact that it's come up to there, now it may not, it may go, it may break here, it may continue, but just the probability of a nice retest from here to trigger this has gone from like a 70% move to like a 50% move now that we've actually hit a strong area. I mean, look at it, it's just breaking through, but
Well, it's not following any of our rules, quite frankly.
well, I mean, I say yes, but at the same time, if we actually had have taken the proper entry down here, this was accumulation, manipulation, IFVG entry, which is beautiful stuff. Like that's just pretty much off the bat. AMD, we would have had a 1 to 2 to like this would have been the target basically. That we missed that. We didn't. I was hoping we'd maybe get a TDI chock, but we didn't get a TDI chock. Plus, it was right in front of our entry. And then, okay, we've got a third opportunity, but it didn't present. It didn't come back down in time and just continued to move. So, I mean, there's not much we can do about it. It's like there's lots of good entries happening, but just not lining up. But I don't know. I've already taken 3 trades, so I might just call it. There's a lot. I feel like there was a lot of opportunity today. Lots of movement, which is beautiful. We could have taken a lot of points. I've had that feeling the last 3 weeks. Really, they've kind of there's been lots of opportunity. I just haven't been really jumping on them as best as we could, or trade management, and like I'm not complaining today. I think I ended up 2%, 2.5% up or something like that. Where are we? Yeah, where are we? One lead account 26, 143. So just under 2%. We were just under 2% on the lead account. Yeah. But I mean, it was a great day across the board, but it could have been a really, really good day. I think the 2 of the 3 trades that I got in should have did hit TP, but my trade management was off. And then, or I got greedy by pushing my TP, shall we say, and then trailed too aggressively. And then a few entries that were pretty close that we didn't quite take, and a few entries that we didn't line up. But all in all, for me, I'm not sad about today. It was a pretty profitable day.
Yeah, that's good. What I found interesting about today is when we're up it kind of felt like no man's land.
Yeah.
So I was definitely aware of just wanting to be more cautious because of those nasty moves it can do when it's in no man's land. One way or the other.
Yeah, well, I think today's downfall for me per se was I didn't actually like on my top-down analysis. I didn't really go back. So we look at the 4-hour chart and I'm looking at it like this. I'm like, yeah, we're breaking highs, right? We're breaking out and doing that. But I didn't actually go back into the finites of this and see, okay, when we come back in here, what are the key levels? Like, what am I looking at? So I had to do that in the middle of the session, and I didn't have any liquidity marked up. I wasn't like, okay, there's still key levels of liquidity here that we could have tagged into, or a fair value gap here that we're kind of breaking through. So I didn't have any of that data from way back on the lower time frames, and so I didn't really have any of the key levels marked out. But I mean, on that, when we're in this kind of zone and we're in no man's land, we broke London high. So the next area, where is the next area? Well, there's a fair value gap here. So really, we should be bullish bias until we get to a key level. And that's the thing that I think I didn't really attach myself to. I was quite open to taking shorts at reversals, but this wasn't really a short and reversal area, because when do we take it? Is when we've reached a key area and then we get the reversal. But right now, okay, yeah, we pulled back a little bit, sure, because we can't just let the market run directly sometimes. But this was just a normal pullback, and we're in no man's land. So rather than looking for shorts here, like I kind of was hunting for, and don't get me wrong, they could have turned and they could have been shorts, and it wouldn't have been that bad. But when you zoom out, the main goal for right now should have been, well, we're actually still moving between key areas. The fact that I didn't have previous stuff marked up meant that I was uninformed. So I didn't know if I'd missed a key level here. And I was like, well, that actually did reach a key level and now it's going to turn, or if there wasn't one. And because of that, I didn't have the certainty of like, actually, this is a pullback. We should still be looking for buys because we haven't made it to our key level yet. And that was what I did wrong today, I think, in terms of, the trades that I, like my trade entry.
Totally makes sense too. I mean, when we've taken out London high plus the weekly high and coming out of 4-hour fair value gap, yeah, that's that, and it never came back to the weekly high.
Yeah, no.
That's a bullish game.
So yeah, and I think, I was kind of really trying to look for those reversals, which is often a good trade, but we got to understand that that's a good trade when the key levels are there, but we don't have the key levels. So what do? We just keep trading bullish until we reach the key levels. And because I didn't have them marked out, I was uninformed. Or if this was the only key level, which I didn't trust, then we should have just been looking for buys. And if we had have had that sort of conviction of buys, I think this inversion fair value gap down here wouldn't have been that bad. It would have been quite a nice little trade. Even the chock here, I mean, to be fair, we got the chock. We were waiting for a pullback or a retest. We didn't get it. Can't help that. But, we may have been more inclined, because I definitely saw this, when this painted like this, and I was like, oh, we're going to get an inversion gap here. And I thought about it, but then we saw this wick, and I kind of was like, oh, no, maybe it is still bearish, maybe it's not. But that's because I didn't have that conviction in my analysis prior to the market, because I didn't mark it up properly. But hey, you can't win every day, right?
Yeah.
And I mean, I'm saying this like I lost today, but I still ended up green, like almost 2%. So
Like it wasn't bad. It's just how do you, well, it's just acknowledging. I mean, for me, it's acknowledging him still letting areas that I'm not sure of just make me cautious rather than reading the chart. Like read the chart.
yeah.
That's all. Just read the chart.
Yeah, exactly. And I mean, like I said, I mean, today was overall a good day. It could have been better. That's all. Yeah. All right then. Well, I'm going to wrap that up there. And yeah, we'll see you again tomorrow.
Absolutely. Thank you.
Bye. I'm going to mark up my weekly charts as well. What do I want? I want to mark the team weekly charts. Did I close it? I must have. Okay. What do we have today? We had 2 wins, 1 loss. Very small loss though, which was good. For a total of, what was it, 143 on the lead account, which at $80 is not quite 2%. A little bit more. Let's go 1.8 is roughly correct. 1.8%. Okay, finally getting some of these accounts back to a reasonable breathing room. All right. Well, that'll be me done for today. Let's end that there.